Can give it a couple of minutes or a couple of seconds actually to let participants tune in. Welcome, everyone. Okay, so let's begin. I'm sure we'll get more attendees tune in as we go, but for now, hello everybody. My name is Carol Sufi. I'm a market research analyst at Branch Food, and it is my pleasure to welcome you all today. By way of introduction, Branch Food is New England's leading community of food entrepreneurs launching and growing CPG, food tech, and ag tech startups. Since 2015, we've been hosting entrepreneurs in our co-working space in downtown Boston and supporting them by means of industry connections, mentorship services, as well as funding opportunities through our sister company, Branch Venture Group, which is a network of angel investors who fund early stage food startups with sustainable missions. You can check out our upcoming webinars, community tables, and Food Edge virtual summit on www.branchfood.com. And if you're looking for business support and ways to accelerate your goals, consider applying to our community membership. Today, we're thrilled to host our second session of the Discovery series that we're hosting in collaboration with Survey.com, a leading merchandising software company who also happen to be our neighbors in Boston. Throughout the series, we explore launching in retail, raising capital, marketing products, and developing innovative sampling strategies to help you achieve go-to-market success. Consumer product discovery and purchase patterns are changing, but despite the rise of online shopping, most purchases still take place in stores. Since winning on shelves is more important than ever, we've invited successful food and beverage entrepreneurs to share their key insights and creative wins so you can increase awareness around new products and drive your return on investment in retail. Special thank you to Survey.com for your support around this series and contributions to the conversations. Survey.com delivers in-store execution, activations, and retail analytics for brands in brick-and-mortar retail. Their nationwide team of field reps bring new products to market and manage the complexity of multiple retailers nationwide. Today's session, Raising Capital for CPG Startup Success, is all about financial resources that you can leverage to support your startup's operations and growth. Expect to gain insights on how to successfully raise capital, work with investors, and create win-wins that ensure successful outcomes for all. A couple of notes before we begin. The session is recorded and will be shared with all the attendees, and the last 15 to 20 minutes will be dedicated to Q&A, so please submit your questions throughout the session in the Q&A function that you can access on the bottom of your screen. To kick off the session, I'd like to welcome our moderator, Jason Baldachino, the CFO of Survey.com, who has supported the company through several funding rounds leading up to last year's acquisition by Trax Retail. In addition to cash management and investor reporting, he also drives revenue with Survey.com's larger partners. Jason, thank you so much for joining us today and for leading the discussion with Ayeshah Abuelhiga, founder and CEO of Mason-Dixie Foods, Claire Schlemme, co-founder and CEO of Renewal Mill, and Marcia Hooper, co-founder and partner at Branch Venture Group. Over to you.
Thank you, Carol, and the rest of the Branch Foods team for organizing today's discussion. I'm pleased to introduce our panel today. I know Carol just kind of walked through it, but I'd like to spend a little more time on your backgrounds for the benefit of our audience. Joining me today is Marcia Hooper, a partner at Branch Venture Group and an angel investing group focused on food and adjacent startups, and a senior advisor at Boside Capital. With over 29 years in venture investing, Marcia brings wisdom and experience to our panel today. Also with us is Claire Schlemme. Claire and her team at Renewal Mill are helping reduce food waste through upcycling byproducts of oat soy milk into nutritious and delicious flours. Renewal Mill has raised capital in some unconventional ways, and we look forward to hearing more about that path. On to Ayeshah Abuelhiga, CEO of Mason-Dixie Foods. Mason-Dixie Foods has shaken up a stale category, elevating standards by serving up delicious, clean label biscuits in over 5,000 retail locations. Along the way, Ayeshah and her team have overcome many obstacles, and today she's also finding time to help others do the same through Project Potluck. Before we dive into the discussion, we'd like to run a quick poll. The poll will just kind of survey our audience to see, where in your own fundraising journey you are, And, it'd be great to just get your feedback there so we can frame the discussion. While that feedback's coming in, let's get started. As everyone on this panel knows, there's no one way to raise capital for your business, and everyone's journey is unique. I'd like our audience to understand where the perspectives they're about to hear from are coming from. So let's begin with each of your own personal fundraising journeys. Ayeshah, talk to us a bit about how Mason-Dixon got started. What sorts of outside capital have you used, and where was your business when you were able to access it?
Yeah, so Mason-Dixon is a little bit unique. We started out as a restaurant in 2014 and spun off a consumer goods product just based on consumer demand. So that came out in about 2015. And we bootstrapped ourselves up until around 2018, where we raised a seed round of funding. That seed round, however, was a bit unique because, again, it was shared between the restaurant as well as the CPG brand. So we raised about 1 million privately, so through angel networks. And then a year in, obviously, the consumer product brand continued to grow at an exponential rate. So we decided we needed to raise a formal round. So we went on a Series A fundraising excursion through 2019. We had about a $5 million goal. And right at the end of 2019, we had about 4.3 in commitments. So we closed a portion of the round, waiting for the rest to come in the following year, and then ended up raising 6.3 total at the end of last year.
And great. And how many retail locations were you in when you launched that Series A?
When the Series A hit, we were in about 4,500 doors.
Great. Claire, yeah, I know Renewal has been through quite a journey as well. Can you share some of the details?
Yeah, sure. So I founded the company about 5 years ago, and we were grant funded for our first 2 years. So we had our initial capital from winning a business plan competition, and we got a grant from the Closed Loop Foundation. We took in our first investment in the summer of 2018. That was convertible notes that we were raising as part of our participation in the Techstars inaugural Farm to Fork Accelerator program. So the large part of that was taken by Techstars. Then we raised our first price round in January of 2019, and that was a 1.5 million. Kind of a pre-seed seed round. It was really helping us get all of our operations going so that we would have our first upcycled ingredient at scale commercially available in the market. And then we're actually just about to close up a $1 million round right now that we're raising on a safe note. And as part of that, we did a equity crowdfunding campaign that's comprising part of that $1 million.
Great. So is it safe to say that you raised a lot of this capital to get your operations up and running because of the uniqueness of your product? Is that
absolutely? Yeah, it's pretty capital intensive up front to start this kind of bridge building business in upcycling.
Excellent. And Marcia, maybe you could share a little of kind of how Branch Venture Group invests in small businesses and just give that perspective as well.
Sure. Well, Branch Venture Group is an angel group, so we are group of angels, which are accredited investors who really want to support and invest in new businesses and entrepreneurs. And as Carol said in our intro, we are exclusively focused on food-related businesses. And so that includes CPG, it will include food tech, it includes ag tech, and sustainability is sort of our kind of fourth area. So if it touches food, we'd like to think it's something that we look at. The entrepreneurs submit an application online. They go through a screening process. One of the principals of Branch reaches out and has a conversation with the entrepreneur to see if it's appropriate. There's always a bit of luck because we don't want to go, we meet monthly and present. The entrepreneurs get to pitch to our angels, and we try to offer diversity. So we don't want, 3 granola bars or 3 beverages. So we try to, so if you happen to be coming at the same time as other competitive products, that's sort of the luck of the draw. But we then meet monthly. The entrepreneur will present, and depending on interest, we then go into a diligence process. And that diligence process can be anywhere from 6 to 10 weeks. and then financing is brought forward to the entrepreneur. And part of our services, along with diligence, is we work with the entrepreneur in making sure that the structure and the amount of funding makes sense to really bring the company through not just this financing, but into the next level where they can continue to be successful. And you might think of future proofing. We spend a lot of time thinking about how is a company going to grow and what are those critical milestones in that evolution as it continues to grow, develop, and succeed.
Yeah, and then Marcia, do you primarily do equity investments, or are you doing kind of convertible investments that are going to convert into future rounds? How do you usually approach your new businesses?
Probably, if you talk to any entrepreneur, one of the first things that they say they want to do is be cash efficient. Money matters. It's really important. And the least expensive way to raise money is either through a convertible note or a SAFE, which is and we can get into that. I know Claire said that she was raising a SAFE, which is a simple agreement for equity. And these can cost anywhere from $5,000 to $10,000, whereas a priced equity round can be upwards now of $25,000 to $35,000. So for a lot of times for entrepreneurs, when you're raising really critical capital, saving $15,000, $25,000 is really important. And so let's get a way to bring money into the organization. The terms will be specified at what value, easy to do quickly. Convertible notes and safes also allow the entrepreneur to continue to raise money over a period of time, which again, that flexibility ends up being really critical, because often when you get into it, you may realize, oh, we need a little bit more money to, purchase product, invest in marketing, maybe hire additional people. So that flexibility in the convertible notes and safes is probably the choice right now. Most entrepreneurs, until they really have what I'd say is a sustainable business model, real revenues, real flow, and they have a lot of more certainty, and then they move to the priced equity.
Mm-hmm. Yeah, I completely understand that. Well, thank you for sharing kind of the journey you've been on so far. I'd like to take a step back and go to the very beginning of your journeys. And, I just think back to the first time I went to one of the big industry trade shows, and I was blown away by how many, great brands there were on these floors. And that's intimidating, I think, for many young entrepreneurs, if they're looking at launching and they attend one of these shows and they just see the breadth of the competition, so to speak. And it's pretty unique in our space. And I think it's actually a testament to the great work that people like Marcia and Branch Food Ventures and everyone in this ecosystem has done to support such a broad range of new firms in the market. But I'd like to hear a little bit about how each of you made your brand stand out to investors. How did you kind of stand out from that crowd? How did you differentiate and get that initial interest that allowed you to start out? Claire, I know you kind of mentioned you went through some grant programs, and it sounds to me like perhaps you kind of sidestepped having to deal with that kind of up front. But love to maybe have you kick off here and discuss how you kind of got that initial catch.
Yeah, absolutely. So I think the idea of upcycling was, it's still pretty nascent in its growth. It's beginning to pick up a lot of traction, but 5 years ago, it was definitely like a new concept. In fact, people weren't really even kind of gathering around that word yet, right? The idea was there, but it wasn't even cohesive enough to kind of have a standardized word that people were using. And I think that was part of the attractiveness of the idea to folks, was that to most of the people we talked to, this was like a pretty new it was a pretty new concept in food when they were thinking about, obviously the concept of upcycling is not new, and it happens in a lot of other industries, and it's been happening in food as well. But I think it was different enough from a lot of the things that they were seeing that there was that initial interest in it. I think the challenging part for us was, of course, we're in the food space, but it was hard to kind of prove demand because we didn't really have supply yet, because we were trying to raise the money to be able to produce that supply. So I would say that, the thing that was great for us, an advantage we had, was that we were in a pretty unique space. And so that was a differentiator that got us a lot of initial conversations. But then the mountain we had to climb was being able to tell a really compelling story and a compelling narrative without a lot of data, that this was a space that was going to explode, and it was a great place to make an investment.
Excellent. Yeah, and I want to come back to that point later about how you present that data story when you don't have any data. Ayeshah, you tell us how you sort out. I mean, it's a pretty old school category, right? There's not a lot of new innovation there. So how did you kind of shake up and get investor attention?
Well, I mean, just going back to Expo, we weren't even accepted into Expo as a natural product the first year. So that just kind of tells you the state of the industry at that time was very prescriptive, very, still vitamin world, right? And if it was organic or not, right? Those are the options. So when we first got started, we didn't really have a home in this space. So that's probably a lot of why I sought external financing via angels and private equity or private investment, because there are more people that are open, privately wealthy, to just placing their money where they believe in the founder, or they believe in the concept, or they love the food, right? So having a restaurant was a great place to, solicit interest from people, because they could taste what it's like and really understand why this was important. But I will say a lot of what we did for the restaurant concept, I think is still applicable today. When I launched the concept, I'd left a 15-year career in tech and automotive. So coming into food was going to be challenging, right? Because everyone at that time was like a chef on, some fancy TV show on Bravo or something. And so not having the street cred, I had to find a way to make sure that the brand could get out there, that there were market metrics available to say that this is something people wanted. So we were one of the first companies to put ourselves on Kickstarter that wasn't like an invention. So we were one of 2 food companies at the time. And it wasn't about the money. It was like a $27,000 campaign, but it was more about, if I can get market metrics to show that people in California eat biscuits, that, I could sell this in New York, it's sell in Florida, then I had a real concept. And that's how you create data for yourself, right? You can go and create the story, craft the market if there isn't information about the market size. And so, 30 days later after that Kickstarter campaign launched, I had, 385 backers from all 50 states and I think 6 countries. So it goes to show you that there was market traction, and that was really there. And that's sometimes all you need to kind of get over that initial hump when proving out your concepts.
Gotcha. Yeah, no, that's interesting. Marcia, over to you. How do brands stand out? You mentioned sometimes you're one of 4 granola companies submitting in the same month, and what makes one of those 4 pop out and get your attention?
In an early stage company, it's very difficult to separate the entrepreneur from the brand that they're trying to create. So really finding those really strong entrepreneurs, for people that have, what's their reason? It's interesting. We have met some entrepreneurs that seem to look for white space, go through data and say, well, there isn't this, so let me make that. But they have no connection to the product. They have no connection to why. And the data alone won't get you sort of there. So it's really important that people talk about what's the origin story, and why create biscuits? What was it that sort of said, hey, this speaks to me and I think it will speak to other people? So that, it's a word that gets used a lot, but authenticity, we really seek that authenticity, that the brand's authentic and the entrepreneur behind that, because there are going to be some really hard times. And if you don't have that drive to really kind of want to push that forward, it can be really hard. And, we've seen companies who really deeply experienced CPG managers knew how to do everything right, got the investment, brought a product to market, and shut down within the year because it just didn't have traction. And they weren't really behind it. They thought, oh, there isn't one of these yet, and let me go try it. So I think you have to have both, which is part of the entrepreneur is such a critical part to success.
Mm-hmm. And how would you recommend for prospective entrepreneurs, when to your point, you're submitting an application online, right, to Branch Food Ventures, how does the entrepreneur make their story stand out in that submission, beyond just the company and the product? There's so many check boxes you're trying to hit in that application and that story.
In almost all cases of deaf, people will talk about, it's sort of, where they're getting their inspiration, what's inspiring them, what's the drive? Tell me why you're doing this. And if that has that authenticity, the rest kind of come through. There are a lot of rookie mistakes, that we try to help and work with, and we can get in. Listen to Claire and Ayeshah, thinking about scale. What kind of scale do I need as I get to market before I get noticed? But those are some of the operating input we can give as experienced investors, and introduce the company if they don't have that expertise. But that vision and the sort of that motivation is really critical. And it's something that in talking to the entrepreneurs, you can hear and you can see. So it's definitely there's a strong, that strong motivation, and it's what we look for.
Great. Yeah, and I want to continue on the same theme a little bit. We've touched a little bit upon data in this conversation, and obviously data is all the rage right now. And I mean, it always has been. Nothing's that new and unique, but still today everyone wants to see the data. Show me the data. And Claire, let's go back to you here, because I think your situation is very interesting, and you have to prove a market as well, right? You have to prove, and you don't have, even Ayeshah can point to frozen category movement or things along those lines, and here you are with a product that frankly isn't really exist in U.S. supermarkets, right? So what kind of data did you use to create that initial pitch?
Yeah. Yes. So we relied on kind of trends to support where we were operating in. So we had a lot of data around sustainability selling, and some of it we even reached outside of food, right? Because there hadn't been a lot of studies that had been, or surveys that had been particularly looking at the food space, but we knew that the movement was definitely towards, having mission-based companies, sustainability being a big piece of that. And as we've gone along, we've been able to supplement it. We actually ran our own survey of like 600 folks or so to get some data in, so that we could see, what's driving purchasing behavior. And of course, this is just like stated preference. It's not revealed. It's not proving that somebody's going to buy something in the grocery store because it's a more sustainable product. But it was really great to see that sustainability claims were like neck and neck with organic when we ran this survey. And that was somewhat compelling to at least prove that there is an opportunity here. And then we would do as many kind of small pilots as we could to get data in, and something that we could use. So we got a lot of mileage out of partnerships with folks. So we did like a month-long vegan ice cream flavor of the month with an ice cream company in San Francisco, and we utilized our upcycled ingredient as in a cookie form as an inclusion in the ice cream. And that was something that we wouldn't have been able to do on our own, something that scale and reach that many people. But we were able to use the data from that product to be able to show that this was, one of the best-selling vegan ice creams that they'd had, and so that there was that traction there.
Great. And Ayeshah, did you find that you were using a lot of category data in your early presentations, or was it all focused on the restaurant and the velocities that you were achieving there?
Well, I'm a firm believer in that we're in a world of data now, and you can prove anything. Yeah,
Right.
There's something out there to prove your point, right? So, I mean, yes, we use POS data from a restaurant to showcase that these items were in demand, but then we also use Technomics Google data that showed that $1.5 billion market in biscuits, right? So that data is publicly available. I think it's really important when you're young to identify market size appropriately. I think just double, triple check that, because folks, I think, go in with these like small numbers because $12 million is a lot when you're poor, right? Like I'm like, oh wow, that's a big market. It's definitely not a big market to an investor, right? They want to see that you really have the ability to show traction and get, you know, even if it's a small percentage, it's a large piece of the pie, right? So, you know, using improving market size, I think, was important at the time. Honestly, frozen was down, so it was not a good metric. And that's the other thing. Don't use bad data points like to prove your point. I've helped a lot of folks with pitches, and I can't tell you how many times where they'll use a bad data point to try to prove there's an opportunity. And I'm like, that sounds awful. You have to take it out, right? Like, don't try to use downward trends in your favor all the time, because at the end of the day, it's still a negative trend. Nobody likes negative trends. So that was something we were also careful of, because obviously we came out in gluten-free era, organic era, you know, plant-based era, and we were the antithesis and still are the antithesis of all of that, right? So did I want to show a downward trend in bread spending? No, right? So instead I sought the market out. Instead I found that, you know, bread buying is still one of the top highest attach rates in a cart, right? That you know, you find other ways to prove your market point, and that the opportunity, yeah, I knew the opportunity was that I could grow the category. But you got to prove yourself, and you got to earn those stripes, and then go after that attack once you kind of get there.
Yeah, that was some great insight there. Marcia, any kind of thoughts on maybe some bad examples to Ayeshah's point of entrepreneurs bringing bad data to the table that hurts their stories, or maybe any particularly kind of interesting or outside perspectives that you've seen?
I think it's really important for entrepreneurs to think about what a grocery store is, because they tend to think about the size of the market and maybe shelf space. And hey, there are 50 salsas, but they don't have my salsa I got from my grandmother. So they could definitely, you know, why not another one? And a couple of things happen. Grocery stores don't really think of themselves that way. They tend to think of what is generating margin for them. What's margin are they going to get from your product, and what's the turn going to be? So store velocity becomes really important. And I think a lot of entrepreneurs tend to think about packaging and variety before they start to think, do these, you know, what's a typical turn for these products? And can I show that I can meet or exceed those? Because if you're going to meet or exceed them, then if I'm a grocer and I take off one salsa and put your salsa on, most grocery stores now are fully shelved. They're going to put your product, they're taking a product off. So you have to get yourself in that mindset. Am I going to generate more margin for that grocer, or am I going to generate more sales? And if you don't have an answer for either one of those, it's really hard to say, so why is the grocer going to put that on their shelf? And I think a lot of people don't really think about it from that retailer side. They tend to think about it from a flavor, opportunity, you know, their motivation. And you're an important part, but you've got to think about it. And, you know, Ayeshah, I tell you, the most competitive place in a grocery store is freezer, because it's the most expensive, and they really want to be sure that they get, you know, margins. And it's the highest price point. There's no surprise when you go look at, you know, what are the highest price points in a grocery store? They're in freezer. And so you really need turnover, and you really have to show. So being able to go in and show, you know, how quickly your products sell out. And, you know, Ayeshah said she would stock them and they would be out in hours. Any grocer gets that velocity and says, okay, let me, you know, I'm interested now. Now it's a question of, can you meet that demand and all the rest of it? But I think really understanding what's in it for the retailer is really important.
Yeah, that's a great point. I know that anyone who's been in the industry for a little while starts in instinctively referring to the retailer as their customer, right? But when you're outside the industry, you might not think of that way. You might think the consumer is your customer. But to your point, making sure that you are thinking about what does your customer want, the retailer, is going to be critical to you gaining traction and getting on shelf. You know, we talked a lot about how to get attention from investors, but, you know, one common rookie mistake that I've seen from, you know, entrepreneurs is forgetting that you're also you're important on the other side of that transaction, and that there are many investors out there, and you don't have to work with any particular one. You know, at Survey, when we were raising money, finding investors who are aligned with our mission and the path that we wanted to take to get there was critical. And that influenced and led us to perhaps take a slightly lower valuation to have the right investor on our cap table, rather than one who was going to push us on a path that we didn't want to go down. I'd like to spend a little time hearing about some of the experiences of our panelists today on how you've evaluated potential investors, ensure that they were aligned on your mission, your path to market, the growth rates that you were trying to achieve, and how you ensure that alignment existed before you signed a term sheet. Ayeshah, do you want to maybe get started here?
Yeah, sure. I'm a bit atypical here, I think, for a lot of the folks on this call, even too, because I think everyone thinks venture capital is the only route to take when fundraising. And I actually found, after kissing 180 frogs, that was not the right place for me. Because when you have serious conversations around your mission and your beliefs, or even if you believe in your product type, a lot of funds are mission oriented in their own way, or product oriented, or category oriented. And if you're fighting an uphill battle, it's just not worth your time, because just as much as it's a legal and financial expense to go and raise capital, it's also your time, right? You're a founder, CEO, COO, sometimes all of the above. The last thing you want to do is be wasting time on folks that'll never actually turn a coin, right? They're never going to come to your side. I had one example where I went to a VC that I had a lot of interviews with, like it was going well. And then, they had frozen food experience. I was like, okay, this is great. And he told me that, he wasn't really wowed by the thought that frozen bread was $1 billion category. And in fact, he thought it was more important to own 100% of a $10 million category than of 10% of $1 billion, which I was like, what? Okay, that's interesting. But that was his approach, right? He wanted to find brands that own 100% of their space, maybe nuanced like Claire's position, right? That would have been more in line with him. So I quickly realized I wasn't going to find my Prince Charming there. So I went back to the private market and realized, and this is true today, there's a lot of private wealth out there looking for places to put capital. And if you have a compelling story or a value system that matches, they are a great source of opportunity and partnership. One of the things I valued was that we have always been woman-owned. And I was scared, in the Series A, am I going to lose that designation with dilution, right? Or are we really going to be able to prove it? So I, told one of my lead investors, I thought it was really important. And he was like, all right, well, let me ask the ladies and see if they want to put, money in, or if their husbands will let them put their shares in their wives' names. And it was a great way for me to preserve being woman-owned, because at the end of the day, they valued me, the brand, being woman-owned so much that they were willing to potentially lose to their wives, So, and at the end of the day, it was a great move, because women are incredible marketers. They're out there in the grocery store telling people like, I invested in that brand. You should buy those biscuits. It was a great move. So I think that's the thing. You have to really rally around what your true values are. And don't forget, this is a partnership. This is a marriage. This isn't just a bank that gives you cash and you got to pay the bill. They're in there and it's their money. You owe them information and success and growth. Otherwise, it's a gamble, right? So I think that's really important to note. And then, I think it's also really important to know your numbers, know your margin, and know how you're going to grow. For me, being a bread-based brand, predominantly commodity driven. So we have pretty stable pricing models and a really high margin. Baking is one of the most high margin industries in food. So because of that, we're very financeable institutionally, like through banking, and maybe not traditional banking, but private banking is another thing out there. And so, we have a $2 million ABL line, and people forget that you can finance your receivables. You can finance your inventory to grow. You don't need to use equity and your cash, to just finance a PO. It's probably the worst thing you could do. So be smart about the mix of cash that you have, and realize there are other opportunities to kind of get to that next level.
Absolutely. At Survey, we were also able to leverage those sorts of facilities, and and I do want to spend some more time in a minute on that concept around how do we find alternative ways of funding a business, and what's the right balance in the capital structure. But Marcia, I'd love to hear a little bit from you as well about how you seek to align with your entrepreneurs that you're evaluating, and make sure that the path that they're going forward on fits with your group's goals and mission.
So I'll give you a trade secret here when you go meet with potential investors. probably one of the most important parts of the entire presentation is the time where you get to ask them questions. And I can't tell you how many times you meet an entrepreneur and say, do you have any questions? And they kind of look at you blankly, like, no. And you just begin to think about, you're entering into what should be a partnership. And you want that curiosity to say, hey, you know, it can be any questions, you know, what about my presentation excited you? What about makes you nervous? What, you know, have you seen other companies like this? What have you worked with other companies that have this capability? But to miss that opportunity to sort of be willing to go out there and ask questions and put yourself out there is such a critical thing, because you're going to be making really important decisions. And as an investor, I want to know you're soliciting the best advice you can get. Nobody knows, nobody has all the answers. So being able to solicit and ask questions, really critically important. So that's a tip, you know, force yourself to learn to be a better questioner. I think the other thing too is it's absolutely a match, and be willing to think openly. As a, you know, Ayeshah was talking about margins, and a lot of times what can seem like that's just an arbitrary rule. But if you're coming in with a margin that's only 20% and you want to go to market and you want to, you know, sort of support your brand, there isn't enough money and you want to pay yourself, you just can't do it. So either you've got to go back and say, can you raise prices? Can we reduce cost? And you've got to be able to understand, you know, kind of where your constraints are. And I've met a lot of entrepreneurs that have very low margins that just, if they don't find this equity, they're, you know, they're shipping dollars with all of their products. And they say, well, when we get to scale, all of this will change. Well, you'll never get a chance to get to scale, because you may not be in business. So I think really being able to say where your challenges are and kind of, you know, how you learn are important. And sometimes you got to go back and rethink. Maybe I shouldn't use this real premium ingredient. Is there another, you know, substitute that I can, that's going to give me this, you know, the same properties that I want and doesn't take away from the values I want to bring to my consumer and my product. But one of the reasons due diligence is, and I said, you know, it's somewhere between 6 and 10 weeks. It's really important that there's a chemistry, and it just, you have to feel like, you know, the proverbial, you know, I could sit in a transatlantic flight next to this person and walk off the plane and want to turn around and go back and sit next to them again. And so you really want to have that partnership and give and take. It's really important. I've met a lot of closed-minded entrepreneurs that don't get very far, and I've met a lot that really had so many questions, but you could see how they could really build a product, and they were willing to listen, and we're going to take input.
Yeah, I mean, I think it's great perspective, and it reminds me a little bit of how I always recommend people approach job interviews, in a sense. And I know entrepreneurs hate to view it that way, right? But in some ways, you know, it's kind of similar. You know, don't forget that both sides are, you know, need to be important in this conversation, and both sides need to evaluate the fit, and it has to work for everybody, because it is a long-term commitment where you have to work together to achieve success. You know, we started the conversation. So Claire, I want to pivot to you by focusing on alternative funding methods, and talk a little bit about the crowdfunding that you've recently kind of kicked off, and, you know, just explore how you've financed your unique product in business.
Yeah, totally. So I'd had a bit of experience with that. I had a Kickstarter as well for my previous company, which was a juice company. And we got started like with a food truck. It was right when food trucks were really taking off. And one of the things that stuck with me from that was just what an amazing source of PR it was for us. So we had like features in like this beautiful spread in Boston Magazine. Like we had these amazing press pieces before we'd ever sold a single juice out of our truck. And so that was something that I was thinking, you know, I'd seen so much value in that previously. And for Renewal Mill, so most of our sales had been ingredient sales. And then for our own products that we made, we were pretty much in food service. So we were in a lot of like office snacking programs. COVID happened, suddenly the offices have shut down, and we then had to have like a pretty fast pivot into e-commerce and retail channels. So it suddenly became more critical that we kind of had more PR, more brand awareness, and we were thinking about that, how can we do that quickly? And we had this fundraise that we were doing as well. And that was when we decided that it would be a good match to make that part of the fundraise, so that we could get a lot of kind of brand ambassadors who were invested literally in what we were doing and could like share our story. And I think an added component isn't just getting people who are excited about what we're doing, but people who can actually talk about what we're doing and share the story, because there is a pretty big educational component around it. I think sometimes we get a little lost in our world and think kind of everybody knows what this is and what upcycling is, and this idea of sustainable food and how it relates to fighting climate change. And that's obviously not true. And so, to the extent that we could bring in hundreds of people that felt invested in our story and would go out and share it, we saw a lot of value in that as well. So there was, and then, so of course there's the financial benefits of being able to raise the money through that channel. But then there were also all these added benefits as well. It's a pretty time-intensive method of getting money, in the sense that you really need to strategize and organize a big marketing campaign around it. So you need to have a plan of how you're going to keep all of the momentum going through the 3 or 4 months that you have the campaign active. And that's definitely takes a lot of planning beforehand to know how you're going to do that, which channels you're going to be reaching, how you're talking to people, what your updates look like. Do you have, different events throughout the period? But there are a lot of things that have changed recently around the regulations for equity crowdfunding that have made it like even more attractive. So the limit has just gone up in how much you can raise. It is now, all of your investors form just one line on the cap table, which is really makes it really clean and easy. So there's a lot of advantages with it as well.
Great. And yeah, and talking about alternative forms of funding, I know Ayeshah, you mentioned taking out an ABL and whatnot, and like I said, Survey did the same. And for us, people get intimidated a little bit by it, but I can tell you from my personal experience, it really was pretty easy. We just talked to some banks, found, asked them, hey, do you know anyone who finances receivables or finances POs? We got the information, and we found it to be a fairly lightweight process. And I know, and I can tell people that there's a range of different products out there that are depending on where you are from a financial standpoint. If you're ready for audit, you can go to a full ABL. If you're not quite there, you can go to more just a factoring arrangement and just go paper by paper. That's been my experience. Ayeshah, I want to hear a little bit more of the details, maybe to help our audience. If anyone is interested, hey, okay, great, this debt sounds wonderful. How do I get started?
Yeah, I think, one of the first opportunities we had for debt financing was just through a traditional bank, right? Like BB&T gave us our first line of credit. And one of the things that entrepreneurs say a lot, and I'm just like, well, you're definitely not ready to raise financing, period, if you don't, is if a PG comes up, or, you putting your own personal credit on the line to go and get your bank loan. If you're not going to put your own credit on the line, why should an investor or a bank or anyone else, right? Like, you got to put skin in the game. That's rule number one. Right. So, I personally financed our first line of credit through my own personal credit. We started at 35K and then got up to 70K, and, we used it until we couldn't use it anymore. Right. And that's when I was like, all right, well, let me go to BB&T and see if there's other lending mechanisms. And then you realize, traditional banks have a hard time financing businesses if they're not profitable and all these things. So all of us here typically don't fit in the typical banking profile. But if you ask them, okay, if you don't, who are some other private partners you've worked with? Typically, if you're already a current customer of theirs, they're incentivized to get you to a partner lender, private lender that they trust and want you to grow with, so that you do graduate and eventually do become a traditional banking customer of theirs, right? So we asked around to a few banks that we do business with, and, they gave us names, and we kept chasing that down until we found a good number of lenders. For us, because we were asking for a pretty extensive line, we did go through full audit and, have reviewed financials and all of that. You don't have to be at that stage, though. There are lenders like Circle Up, there's lenders like Dwight Financial, like as long as you're hitting a minimum threshold per month, or, you know, some of them can start out at whatever, as long as you have good financials in play, not like not profitable, but at least they're in a way that they can be analyzed and understood by financial people, right? And that's another thing. I think it's really important to find a good financial expert. Don't do this stuff yourself. You're just going to mess it up. If you're not an accountant, it's not a place to play. I see this all the time where people build their own projections and their own models, and then they do their own statements because they're still in QuickBooks, right? Because they're young. And it's like, you don't even have a chart of accounts that anyone has ever seen before, right? So like, you really got to think through and get some accounting help early and upfront, to make sure that you look as professional as possible. It's just like an interview. You don't show up in your sweatpants, you show up dressed up, right? So same thing for your financials and your projections. Make sure they are dressed and to standard, right? And there's people like Claire and I that are out there and happy to help you. We're not trying to steal your business idea. Trust. This industry is very interesting because everyone's very friendly and open to helping one another for the greater mission. So don't be afraid to ask for help and get a second set of eyes from a more experienced person to kind of help you through that process.
Yeah, great. And we'll switch over to some Q&A here in just a moment, but maybe just to close, Marcia, as we talked about some alternative funding here, you know, just now, do you have any concerns when you see a company that maybe has engaged in some of these alternative funding methods, has some debt or has some crowdfunding? Does that ever raise any red flags, or do you see it as a good sign?
You really have to look at what's the nature of the business and kind of why you're doing it. In the case where you're really using based financing to factor receivables, pay inventory, things that really make sense because you've reached that capability in your business, that's a strong sign, because it means my equity dollars are really going to invest in, other parts of the growth, the people, the marketing, the other real critical strategic parts that are going to add to the value. So, and it's less dilution for me. So that's a very positive sign. I think in regard to crowdfunding and kind of really understanding sort of mission-based companies, it can be great because you get to show there's a lot of traction. There are people here that are willing to come in and maybe reach out of their typical investment comfort zone to do this thing because they believe. And so that can be a really positive. What you just have to be so aware of is that funding can be fashion, and do not, trends in food are totally fine. Trends in financing, just be very wary of. Just because you heard some other entrepreneur doesn't mean that's the right thing for you. And, actually talk to an expert. And there are so many, and there are a lot that are free. Getting somebody to, really work through your, financials and accounting is great. I think a lot of first-time entrepreneurs, one of the things that they really lack is really doing a forecast and holding themselves accountable. And they're just, because they're working every day, and as long as they've done a little bit more today than they did yesterday, they're okay. And the answer is you may not be okay. And really hold yourself out for, okay, what did I want to, a month goes by so quickly. And if you don't stop and say, where did I want to be at the end of the month, you'll get there. And you can kind of look and say, wow, I'm way off. Why? And then learn. And so that's something that almost, every investor that you meet will probably say, do you have a forecast? And they're not saying, oh, this is just dumb work. They're really trying to think, how do you think about the business? And are you holding yourself accountable? So I think that's really important. And make sure the financing provides the flexibility you need. The worst thing you can do is get into a financing that forces you into a certain set of decisions that become irreversible. And then it's like being, in a car where the brakes suddenly don't work.
Yeah.
And that's a tough place to be.
No, your point about making sure that you're not raising equity to fund working capital, it can't be emphasized enough. Working capital is the worst thing in the world to sell equity for. You're not building a better business. All you're doing is financing Kroger's, AR, and that's a bad way to sell a piece of yourself. I'd like to turn it over and answer some of these questions that are coming in from our attendees. And there's a great one here about the safe method. And maybe, Claire, you've raised with it, I believe you mentioned, and Marcia, you're familiar with it. Maybe you guys can just comment a little bit about what that process looks like, why you chose it, and how that works out.
Yeah, the reason why we chose it is really what Marcia explained. It's a very easy way in some ways to get cash in the door, and to delay the decision of going through the whole valuation. It also is really helpful to be able to have a rolling timeline on which you can bring in investors, so you don't have to coordinate everyone around a set close date, which is great. So yeah, it's basically, you just kind of determine what your valuation cap is and your discount rate, assuming that you include both of those two, pieces in your safe note. Y Combinator has drafts of the safe notes that you can use on their website, and you basically plug in those two pieces, assuming you're going to use both of those in there, and you're kind of ready to go.
Yeah, and maybe Marcia, can you just educate anyone who's not familiar with what the safe method is, maybe, and just kind of give us some of the basics?
So if I were to be jocular, I said a safe is a reservation. You're making a reservation that you'll be able to buy equity in the company at some point in the future. And when they started, they of course started out in California, and they started out for a lot of these, and Y Combinator actually was the originator. And the idea is, we hand select amazing entrepreneurs that are creating amazing companies that get funded by tier 1 VCs. And if you, angel, want to get involved and get your reservation in early, buy a safe. And it just meant at some point in the future that would turn to equity. As they got to be this very inexpensive way of raising capital and very flexible ways of raising capital, which you can continue, it started to suddenly be, well, am I valuing the company at a fixed value and then add the amount of capital I'm raising, or am I going to do it on a the capital actually is put in, the value includes the capital I'm putting in, I get a fixed step, and anything you raise after that doesn't dilute what I'm doing. And so you get into these pre and post, and there's some nuance. Y Combinator has really looked at it, and their current safe is a post money safe, which is both protects the investor and protects, and is got certainty for the entrepreneur. And that to me is kind of that win-win situation. There are still some safes that are done on what's known as pre-money. You just agree to value pre, and if you raise 1 million or 3 million or 10 million, your post keeps, you don't know. You have no idea as an investor what you're really investing in. And that uncertainty generally is not as an investor, you want to know, I'm helping you now, what reward am I going to get? So, but the current safes and Y Combinator, they're totally free. They do say when you look at them that you may not change anything in it, or it invalidates it. So it's a really great tool. And we've actually done a number of post money safes following the Y Combinator.
Great. Another great question from the audience here. And I think I know where it's coming from. There are food and beverage industry investors, while growing, are still a limited pool. And there's not the only source, to Ayeshah's point. There's plenty of other sources of capital in the space. But are there any recommendations from the panel here on, if you want to source an investor who's experienced in the industry, and can help you actually, because you're maybe new to the industry and are looking for investors who are a little more hands-on, how do you find food and beverage investors? Where are some good resources to access, or networks to tap into?
We made a list of kind of all the companies that we thought were interesting and doing well in the space, and basically did a bunch of research to find out who had invested in them. So folks that were kind of similar to us in different ways, kind of looking at different attributes of the business. And then that was like the first way we gathered our list of who would be potentially interesting to talk to. I think also because we got to expand a little bit beyond just food because of the sustainability angle of what we're doing. So we were able to kind of have a wider net into impact investors and people that were interested in sustainability. But in terms of food, I think it can be really handy to see like who's invested in other companies and start there as a way to get that list going.
And I'd say, some of the simplest things is just look at sponsorships like this, right? I mean, like you go to a webinar and Branch Foods behind me. I mean, that's where you start, right? I think Expo West is a great place to know what VCs and investment groups are out there actively looking in the space. So you're already kind of checkbox, these guys are in play. But I also think it's really important you understand how venture capital and those types of groups work. Just because they invest in food doesn't mean they're going to invest in the dollar amount you want. There's a lot of funds that are early stage, so they're typically making investments of less than $1 million. Those are the people that you need entry level, right? A lot of times people make the mistake of going to a fund that wants to put $10 million in, and they're like, yeah, but they're perfect. Yeah, all of them are perfect. All those guys are perfect because they have proven brands under their portfolio. So you want to be in there, but you got to earn your stripes. You got to wait your turn. And some of the things that I did very early was I started talking to those folks to ask them what were some of the feeder VCs that they typically took out in their round, or like to partner and use them because they're really good, like fishermen, right? So do the homework and really figure out, okay, if you don't know the smaller funds, they are harder to find. Start with the bigger ones and ask them where, they source their first investments.
Yeah, I think that's a great, and Marcia brought up the same point earlier. Ask people around you, go to industry events, look for well-funded companies. They're easy to find. They got nice fancy booths. Ask them where they got their capital from. Talk to people in the industry and get more than one opinion. One thing, every entrepreneur will think they're a genius after they sell their first company, but they had one particular journey that they went on. And while their insight can be very helpful, it's good to get multiple opinions and develop a network who can help you. And to the points that everyone on this panel has made, in my experience, this industry is incredibly collaborative. I think most people are here, Ayeshah and Claire are never really going to compete here. And they're happy to talk and collaborate, and they're willing to share. And I think you'll find, anybody who's new to this industry will find that it's very welcoming. Marcia, any comments from you on how to find the right, experienced investors if you're looking for that sort of help?
I think it's, critical is find companies that look like you and see who funded them. That sort of, it's a really good place to start. And it's great to be aspirational, but if you just don't fit what they do, rather than say, you don't fit, often you don't get you'll get no feedback, or they sort of wonder, why do you think we only invest $10 million and you're looking for $500,000, this isn't a fit. And you get logged into their database as sort of an out to lunch entrepreneur, which isn't what you want either. So, and most of these firms track everything. So, but it's highly collaborative. You can even do things, if there's a brand you've noticed on the shelf, if you're a CPG company, if there's a brand you've noticed yourself, look into how is it getting funded? Who financed that? And who was there at the beginning? There's also a lot of trade publications that sort of announce financings, and it's those can be really interesting. And reaching out to people, I think people are incredibly open to having conversations. But ask the question, if you're not a fit, who do you know that does, who would be interested, and on to the next.
Yeah, and I guess we're almost at time here, but we'll close since we have two panelists here who have used Kickstarter or crowdfunding methods, and some other questions have come up here. And let's talk a little bit about how you made them successful, right? Did it cost you a lot of money? How did you finance that, if it did? And Claire, you mentioned it was you had to really plan around it, right? And Ayeshah, you mentioned you used it before you had raised capital. So anything you would recommend to other entrepreneurs who are looking at this line of fundraising, or just getting attention?
Yeah.
Ayeshah?
No, go ahead.
Hi, Clara, if you have something. Otherwise, I was just going to say, it really depends on how much you're trying to raise from crowdsourcing. I'd say be careful. Like, it's not a great place to raise triple-digit dollars, like hundreds of thousands of dollars. It's just not really practical. But it's a great place to raise up to $50,000 to start on a prototype or finance your first something, right? Like, I think be reasonable about it. I spent no money on Kickstarter. So whoever told you you're spending $30,000, that's crazy. I mean, you can do it yourself. You just have to realize crowdfunding is SEO optimized to hell. So you got to be on top of it. You got to be answering every note to get your rank as high as possible. It's all about activity and interactions. So you don't need to pay somebody, you get an intern to do it if you really need to. But I just think there's a time and a place for it, and you really got to think about what the results you're looking for are out of crowdfunding before you use it as a reliable source of income.
If I can just, not on the crowdfunding, but one of the sort of artifacts of COVID has been so many new brands have had to figure out how to go online and do direct to consumer because they just couldn't do sampling in stores. And a lot of stores weren't even going to do the resets. It was hard to even get on shelf. So forced a lot of brands to do direct to consumer. And that all of a sudden, a lot of entrepreneurs have said, what is my message to my customer? Is my customer appealing? And what are they appealing? And what about price points and packaging and size? And so there's these amazing learnings you can now have as an entrepreneur relatively inexpensively now with direct to consumer, and then take them and say, hey, I now begin to understand how my consumer, my best consumer sees my product, sees that value, to either market it or then start to develop products that really meet that need that can go on shelves. So I think some people have used Kickstarter for that consumer verification, but now with direct to consumer, it's just a critical part now. Almost all brands are getting more involved with, and they should. It's a great way to early on really nail that product market fit.
Great. And Claire, any closing thoughts from your experience on the crowdfunding?
No, just, I mean, I just in terms, I don't think you need to spend that much on marketing. I think for us, it was really more just time and having kind of the bandwidth to plan around everything that was going to keep that momentum going, and making sure that we were tapping into all the right networks for it. Depending on where you are and what stage your company is at, I think equity crowdfunding can reach higher than what you might see with Kickstarter campaigns. So you can kind of get in the higher values there, or the higher kind of raises there, which is great. But it does take work, right? It takes a lot of it does take some effort to get there. But it can be really useful.
Yeah, and you used Republic, correct?
Yes, we did. We raised some in public. Mm-hmm.
And do you mind disclosing how much you were able to raise through that method?
Yeah, so we raised just over 115,000.
Great. Well, I believe that is our time today. Carol, am I correct that we were wrapping up at 5?
Yes, thank you very much, Jason, Ayeshah, Claire, and Marcia, for sharing extremely valuable insights and this fundraising advice with our community today. I know that this is super helpful to early stage entrepreneurs, but also entrepreneurs who are looking for alternative or other funding solutions that they can leverage to support their operations and growth. So thank you again for your time and for sharing those insights. And thank you everyone for attending. Be sure to check out our remaining 2 sessions on marketing strategies and innovative sampling, taking place on Thursday, April 22nd and Thursday, May 20th at 4 p.m. Eastern Time. The sessions are free to attend. They're all recorded, and we'll make sure to share the recording of the session with all of you. So thanks again to all the panelists and to Jason for moderating this discussion, and we hope to see you soon. And in the meantime, have a good evening.
Thank you.
Thank you.
Thank you.
Thanks.